the S&P 500 is going to 46,000. No, seriously. I mean, eventually it will, right? But what I'm telling you, what I want to talk about in this video is why I think that the S&P 500 is on its way to 46,000, right? Now, what I'm noticing is that a lot of people out there are talking about the end of the world because of the lack of liquidity in the market. Not the lack of liquidity, but the Federal Reserve, turning down that liquidity hose and starting to hike rates. And most importantly, because the Federal Reserve said that they do not give one single F about the repercussions in the market from their rate hikes. They want to attack head-on inflation. Now we are seeing some cooling down on inflation, and that might be the reason that we have seen so many bullish days this week. Not so many bullish days, but the past 2 days were extremely bullish, and a ton of spikes in green volume also. Why? Because if inflation is cooling down, that means that the year's end rate hike that was almost at 100% surety is no longer going to happen. Perhaps, we don't know. But in any case, that should be enough to give us a pump in green volume. So why don't we roll the intro, and I'll tell you everything about it on my screens. All right, everybody. Now, this is a short video on the S&P 500. That's right. The S&P 500 is going to at least 46K. Hear me the fuck out. We need to understand one thing, right? I am long the S&P 500. I am long the S&P 500. Let me show you. This is the account that tracks all the VIP trades, the account that is up 7% this month, on a 1% risk per trade, trading only high probability trades. I'm sorry, I was looking at my other screen. So I am long the S&P 500. This is a string trade that I have on with the string VIP team, right? There's no TPs because we are looking at holding this at least for all-time highs, right? Now, this is the weekly chart on the S&P 500. You can now see why we are so bullish, right? Now, if you want to be part of that and string trade with us, with links below this video, we don't trade trades every day because that is a string trading channel. But when we do, there's tons of money to be made. So, why am I so bullish on the S&P 500 if the Federal Reserve is starting to hike rates? Well, my friends, it's all about volume. For that, we're going to go to the E-mini S&P 500 again. The E-mini S&P 500 is the derivative product with the most volume on the S&P 500. Right now, this is the daily chart, and I want you to look at the daily volume first. Right, this was my key level for buys on the spools. This is the spools, right? The E-mini S&P 500. So first of all, we're going to see the volume indicator on the bottom of your chart. There you go. On the daily, we've had some spikes in buying. Now, hear me out. We had this spike in late January, right? Then we had this spike in late February. And then we had these two spikes at the beginning of this month, right? Now, when you look at volume and overall volume, right? And you see a spike in buying volume, that doesn't mean that that market is going to reverse that day. That's not the way to read a volume, guys. Please. Now, just look at the pandemic lows. The pandemic lows when buying started was at these lows right here. This is where buying started, right? And what happened afterwards is that retail traders got trapped on the wrong side of the trade. They got trapped on the wrong side of the trade. And my friends, this is happening again right now. So, my opinion, big money has already jumped in long, right? Retail traders are shorting at the lows of the market. That is a big no, right? Do not go short here. Why would you? Why would you go short at a level of support? That's insane, right? Another thing, right? The immediate bullish structure has been broken with on today's candle. That's one of the reasons we are bullish, right? The other reason, if you look at the daily chart, mates, the yellow dotted lines are the previous month's lows. So this is April lows, this is March lows, and this is February lows. And if we go to the 4-hour chart, let's go to the fucking 4-hour chart. This yellow, that I'm going to work with another kind of colors because that is just too bright. So maybe a green. No, hold on, I'll pause the video. There you go, much better. So today's candle is about to close above those big levels. Now, not only we have broken with the immediate structure, right, and the midterm structure, but we have broken with a massive level of support that turn of resistance, and this is where big sellers were positioned. Just look at this day in historic price action, mates. That day in historic price action was a big ass dump on the S&P 500. This is around, we took a long around these levels, I don't remember. And I have been holding through all this mess. My stop losses are way below. I'm not gonna get into that because why would I? That's only for my VIPs, right? But this video is mostly just to explain to you my bias and why I think that we're going at least to 4,600. Now, let's have a look at this chart, right? Now that the S&P 500 has faked out of this range, right, of this big ass range, and when I mean it has faked out, I mean that there were tons of sellers that got trapped in the wrong side of the market, right? That selling volume that we saw at the lows right here on the day. So now that we have trapped and got the money out of those sellers, price has broken above the previous significant lower high, and we are on our way to consolidate at least inside of this range. Again, remember, this is a big range on the S&P. On the SPOs, we're talking about 121 days worth of range, right? That's 3 months. You can see it here. This is 1 month worth of trading, and this is the other, and this is the other. Just look at the dotted yellow lines on my chart, right? So that was a big range, and the next key level here would be around the 43. Well, right, it would be this one around this level right here. Just let me grab the line. Would be in the middle of the range, right? So we're talking about from this range until the next key level. We're talking about a possible 5.15 move to the upside. Now, this is where next week we will be adding to our longs. We need for the S&P 500 to print a significant low for us to be able to get in and add to our position and move our stop loss to break even or a little bit in profits, right? But that's the idea. And the reason that we are targeting the 4,600 as our first target, one, because all-time highs are at 4,800, right? And the 4,500 level is just very thick, right? Which with 3 monthly highs, same months, that we saw on at the bottom, April highs, March highs, and February highs. Now let me show you the the volume profile on this market. This is the E-mini S&P 500 volume profile, and as you can see, the point of control and the spikes in volume are spot on where I am looking to play this. Let me just delete this. I have no use for the developing value area. So the point of control, this yellow line, and the spikes in volume are spot on where I'm planning to take some of my trades off, some of my position off, right? And it's very plausible that after the break, here is where we will see some kind of pullback before going up, and here is where again I will look for buys. So we have an entire plan on the VIP side. If you want to be part of that, just click below the video, and I'll see you around.